What's happening, guys? My name is Austin, and thanks for tuning in. And I have a question for you. What gives the DevvE token its value? And that's a question that I was asking in the Telegrams and really even to myself. And it wasn't until I took a few hours to dive into exactly what the white paper said that my mind was absolutely blown. And so that's exactly what I want to share with you guys today, because I'll bet if I didn't have a clue, there's probably a ton of people in the community that didn't have a clue as well. So let's dive into it, my friends. So DevvE is incredibly well positioned to become the default blockchain of choice for enterprise and governments due to the customizability and the regulatory adherence possible in the DevX chain. Now, before I dive into this, I just want to say that for every single use case that I'm going to mention in this video, the DevvE token has utility in some way, whether it's by staking to get ESG assets or paying with DevvE to use the DevX solution. Let me repeat that. Holding and paying with DevvE is a requirement. So let's first take a look at the white paper and some of the use cases that are outlined there before we really dive into the rest of this. So this is the white paper, and if you're following along, kids, that's going to be on page 27. And so the DevvE token, utility tokenomics, I want to show you what they say here. So here are some example token utility use cases, which could be derived from our first-party application. So staking to create verification nodes, staking to receive priority access to impact offsets. That's important. Staking as a mechanism to participate in shard governance. Staking for reduction in application costs or fees. Staking for access to product offering. Whew, we're repeating ourselves. Staking to receive token rewards. As a reward to validators, a payment mechanism for ESG assets, a medium of exchange for liquidity mining. You guys get the idea. There's a lot of different use cases, but if you're anything like me, I just read that and it kind of bounced right off of my forehead. So I kind of had to dig in a little bit to figure out what that meant. The final paragraph, lastly, and arguably most important for those who are approaching the DevvE ecosystem from the crypto side, the ultimate question we aim to answer for governments, enterprise, and web developers is how can my specific business leverage this enabling technology to build value for me and my business? And that is a very, very important question. So let's keep this going, my friends. To really understand where the meat and potatoes are from a flywheel perspective, we're going to want to first dig into the Evergreen Fund and what exactly that might mean from a demand and also a value accrual purpose for the DevvE token. So according to the DevvE white paper, the Evergreen Investment Fund, and I'm going to just read this straight up to you, and I'll probably trip over my words, is a strategic mechanism aimed at advancing the organizational objectives of the Forever Association. Now, the Forever Association, I'm sure you've heard of them, but what they are, they're a Swiss nonprofit organization that has the exclusive rights from DevvE to manage the DevvE token. Now, the Forever Association's primary focus is to be a catalyst for the development of innovative, transparent, and decentralized technologies, while at the same time pursuing personal endeavors in the realm of ESG, or environmental, social, and governance. Now, if you're anything like me, you're probably wondering, what does this guy mean by ESG? What exactly is environmental, social, and governance? And hey, I'm glad you asked. So according to the impactinvestor.com, ESG is a term that was coined to mean measuring the ethical and sustainable impact of a company and how their practices are impacting the environment. Now, many companies have committed to having a net neutral or even a net positive impact from an ESG perspective, which simply means they're giving more back to the environment than they're taking out of it. So you've probably heard of companies saying something to the effect of, we're committed to going carbon neutral by 2030 or something like that. Hang on to that, because that's a foreshadow of what's to come. So why is this important to DevvE? And this is kind of really the important part. So this brings us to a discussion on carbon credits, which is honestly a term that confused the heck out of me until I really started digging into it. So the Paris Agreement of 2015, that was an international accord that was laid out to regulate international CO2 emissions goals. So what these did, they gave rise to national carbon emissions goals and, most importantly, the regulations to back them up. So under these new regulations, there's a considerable amount of pressure put on companies to reduce their carbon footprint. And one way that they can do that is through carbon credits. So basically, carbon markets turn carbon emissions into a commodity by giving it a price and allowing companies the option to purchase permission to emit carbon. So if you're a company that emits a lot of carbon and you're going to go over your limit, you have a couple of options. You can either offset that carbon by doing things like planting trees, or you can go on the carbon market and you can buy carbon credits. And let's dig into that a little bit more. So I want you to think of carbon credits kind of like a permission slip to emit carbon. When a company buys a carbon credit, what they're doing is they're paying for the right to emit 1 ton of carbon. So these credits are generated in one of two ways, either by companies who stay under their carbon cap and they're then able to resell the emissions that they didn't use, which incentivizes them, or carbon offsets can be generated by doing things that actively reduce the amount of carbon in the atmosphere, like planting a tree or investing in renewable energy like solar, etc. What's interesting to note here is that carbon credits fall into a regulated market, whereas carbon offsets fall into a voluntary and largely unregulated market. Now, a really good example of a company which generates carbon credits is a company I hope you've heard of if you've read the white paper. It's called TS Nano. Okay, so TS Nano is really neat. What they do is they offer a nano-modified sealant that's actually used to seal up old oil and gas wells. And what that does, it reduces methane emitted into the atmosphere, and it actually generates carbon credits as a result of that because we can quantify the the environmental impact of that. So hopefully we've tackled this problem sufficiently just to get to a baseline. So really the question you should be asking is, where the heck does DevvE come into all of this? So an issue that exists in the carbon markets, and this is a massive issue, is lack of transparency and provable provenance in the issuance of these credits. So at the end of the day, a lot of this just kind of comes down to trust us, these credits are good. Now, if they're not good, what ends up happening is these companies are buying carbon credits that are no good, and the countries or the companies themselves end up not meeting their CO2 goals, which has their own ramifications involved. So where DevvE and DevX are uniquely suited in this regard is that they allow for companies to issue the carbon credits directly on chain. And therefore, there's a verifiable record of when and why the credit was created and whether or not it's been used. Now, this removes the middleman and opens up an entirely new paradigm for the way that carbon credits and offsets are bought and sold. And as time goes on, the caps put on these businesses are actually going to get lower and lower. And what they're going to do, just by their very nature, is the demand for these types of ultra premium assets are going to get higher and higher. Now, if you understood that and you're still watching the video, I appreciate you. But there's one huge aspect of this that I need to share with you. Over the last few years, there has been over $30 trillion invested into ESG-related investments, whether it be carbon credits, companies that are in the ESG industry. That's 21% of the total assets under management in the entire world. And by 2030, that's projected to go up to $40 trillion. Now, you may be asking yourself, why the hell is so much money being invested into ESG? And the reason is because these assets tend to outperform the market year over year. Now, back to the story of the Evergreen Fund, and we talked about this earlier. So the Evergreen Fund is crucial to the DevvE flywheel for a number of reasons. And let me pull up the flywheel here so you guys can take a look at it while I'm saying this. So the Evergreen Fund is seeded through new sales of the DevvE token to institutional ESG investors. Now, don't let that scare you. Those ESG investors are going to be subject to long lockup times between 2 and 10 years on average. So it actually reduces the circulating supply in the near term. Now, those funds are then invested into ESG startups like TS Nano, and the profits from the equity in these companies, which is also enhanced by the ultra premium impact assets that get generated, it all goes back to the Forever Association. Now, the association then reinvests its profits back into the Evergreen Fund, hence the evergreen nature of this cycle. Now, here's the cool thing, and the thing I think you guys are really going to love. For any institutional investor to have access to the ultra premium ESG assets that are living on the DevX chain, they're required to purchase and stake the DevvE token, thereby granting them access that they cannot get anywhere else. And so really in a very real sense, as this cycle goes around and around and new ESG assets are being created and live on the DevvE chain, and also as the ESG investing market continues to mature and grow, we're left with a flywheel effect here, which has the potential to significantly drive demand for the DevvE token. I hope that made sense. If it didn't, rewatch that part while we get into the next one. So the next thing worth mentioning here, and again, this is monumental, and I'm hoping I can break this down in a way that does it justice while still respecting that we're in stealth mode. So the next thing worth mentioning is the exchange. And I don't want to get too far in the weeds with this since, like I said, we are in stealth mode when it comes to public-facing discussions. But what I can say is this. The DevvE exchange has created technology that gives the feeling of a centralized exchange with the security of a decentralized exchange. And what I mean by that is you never have to give up custody of your funds. Any asset which can be tokenized, and I don't just mean crypto assets, I don't just mean ESG assets, real world assets, anything that can be tokenized can be traded on the DevvE exchange. And DevvE will be the intermediary currency facilitating all trades, right? So what that means is every single trade will be paid for and facilitated through the DevvE token. Now, I want to read you a section from the recent community update that just went out in June, which has some significant nuggets of information in it. So, and I'm not going to tell you where they are, so listen closely. In partnership with well-known industry leaders, the DevvE exchange will operate as a hybrid exchange. While using blockchain technology for asset management and exchange isn't new, until now, non-custodial options like Uniswap have been too slow and expensive while being both operationally and legally risky. Centralized entities such as the Australian Stock Exchange spent over 7 years attempting to upgrade their systems with blockchain solutions that failed. They faced challenges with complexity and scalability. Now, similarly with the DTCC, who settled $462 trillion in securities in 2022. That's like 4 times the GDP of the entire world, or something of that nature. Don't quote me. In 2022, they've also explored similar upgrades to their internal system to no avail. Now, listen to this. The DevvE ecosystem has addressed these non-negotiable issues of real-world businesses and old blockchain technology, offering a solution without compromise for value exchange with enterprise levels of liquidity. Now, let's just cap this off by saying that DevvE holds the patents on the privacy and scalability fronts and is working with some of the world's largest financial players to bring this vision to life. So the next utility I want to talk to you guys about, and again, if the ESG didn't get you excited and if the exchange didn't get you excited, because both of those are like massive ideas, here's another massive idea I'm going to throw at you. So DevvX S2, I don't know if you've heard this term thrown around. It's mentioned in the white paper, but DevvX S2 is a joint business venture between DevvE, the creators of the DevvX chain, and the Forever Association, with a mission to making shards widely available to enterprise level clients. And kind of the way that I want you to think about this is like Amazon Web Services, but a heck of a lot cooler. So due to the unique nature of the DevvX chain and the fact that each shard can be customized to suit the needs of the client, DevvX is currently the only chain with the capabilities to suit the needs of many enterprise businesses. Picture this for me, if you will, right? You're a company that would greatly benefit from blockchain technology. Maybe it's for data storage, payment rails, data integrity, provenance, like we talked about for the ESG assets, or any number of other use cases. Now, this spells a potential revenue growth of millions of dollars for you, but there's a catch. All of your data is protected under federal regulations. Maybe you're in the medical industry or something like that. So you have 3 options to pick from. Option 1 is to look at what's currently publicly available and to train a few programmers to write in Solidity. But due to the nature of the data involved and the lack of privacy from a regulatory standpoint, that simply will not work to use a public blockchain to store data in that way. Here's option 2. You hire a team of programmers. You train them in a new programming language, Solidity or Rust or whatever it may be. You lay out a massive upfront cost to get going, and then you have huge ongoing expenses to build and maintain your very own chain. Now, that meets your regulatory needs, but it comes with massive capital outflows and no guarantee of its success. Option 3. Spin up a DevvE shard using an AWS-style interface that allows you to completely customize your own blockchain almost as easily as you would a web server. No new staff is needed here. You can continue to use your current applications and tooling due to the simple REST API, and you can customize your shard however you want it to be and deploy it with full regulatory compatibility. Now, through DevvE's RESTful API and smart contracts coded in C++, any programmer in the world can implement our technology with a simple API key. That means the pool of developers who can build on our chain goes from 200,000, which build, that's EVM chains on Solidity, to 25 million developers worldwide. That's a 125x increase in the number of people that can work on DevX as opposed to Ethereum or other EVM compatible chains. Oh, and by the way, every single business that wants to use DevX, every single shard that gets spun up, every monthly payment for it, they must hold and pay with the DevvE token. Hopefully you guys are starting to see what I'm talking about here. So we have one other use case that I'm going to touch on. And this is, honestly, of all the use cases I just talked about, this is the one that people know the most. And of particular interest to our native crypto community, although very small in comparison to the points already mentioned, is the Launchpad and our unique staking mechanism. So unlike staking in a traditional network where you'd stake to a validator for a set reward in exchange for securing the network, DevvE has created an entirely new system which doesn't dilute the supply, but has the potential to reward stakers exponentially more. So to participate in the sales of new projects that are launching through the Launchpad, you must purchase and stake your DevvE token to receive guaranteed allocations. Now, the benefits of staking extend far beyond just the allocations that you get for pre-sales. Everyone who stakes at least 1,000 DevvE and locks for a minimum of 3 months will receive what we're calling dev drops. And what dev drops are, they're token allocations that are given to the DevvE community by every single project that launches on the Launchpad and, hear me, through Dev Exchange. Are you seeing it yet? So what's really cool about this when it comes to the dev drops is that you can have tons of dev drops running concurrently with one another. You could be getting streamed out 20 different tokens over time, assuming you keep your DevvE locked up. So this goes so much further from a business and life cycle standpoint that it's almost comical. And the truth is that this video doesn't even cover every use case outlined in the white paper. I hope this video has been helpful for you guys to really understand the impact and the powerful value accrual mechanism present within the DevvE ecosystem. And guys, we're just getting started. We haven't even scratched the surface yet. If that didn't get you excited, you might want to check your pulse because we are on to something really huge here, guys. My name's Austin. Thanks you for tuning in. I'll catch you on the next video. Bye-bye.